Greetings traders, Jason here with SwingHigh.com. It is Monday, October 26th, 2009, and this is your halftime report. I'm sorry for not giving any analysis on Friday or the weekend, but I was away in Albany, New York for a racquetball tournament, so I apologize for that, but let's get back to it. Obviously, I haven't made any trades since the middle of last week, so I'm just watching for some convincing movement in the markets, and right now it looks like today we might get that movement. This is a 15-minute chart of the SPY, which is the S&P 500 tracking ETF, or exchange traded fund. I want to draw your attention to the big red bars that we're seeing on the 15-minute chart here, and the volume that's associated with that. That huge volume on those down bars and the length of those bars is showing that the market is selling off with serious conviction recently. That's supporting the bear case strongly there. Let's look intraday here at the SPY. We popped up this morning on some dollar weakness. Now the dollar is showing strength and we have dropped. Intraday right here I see a bear flag formation. Those are bearish. They normally resolve to the downside. Although I would not be surprised if we chop sideways for the rest of the day and finish somewhere between 106.75 and 107.25. We'll see how that goes. If we do break under this low of 106.69, look out below. We're going to head towards our next area of support, which is the 106 is going to be some weak support, but the next serious support level I see is 102, so we'll see what happens there. Back to Thinkorswim from TD Ameritrade. I want to look at some of the market internals here. The tick, obviously bearish, below zero, corroborating nicely with the downside that we're seeing in the markets. The trend is very bearish. We have 1 is neutral, and between 1.2 and 0.8 is relatively neutral as well. We opened bullish below 0.8 and just broke through that about 1040-ish, 1035, and now we are hanging out in bearish territory on the trend, and very bearish territory at that. This reading tells me that there is much more volume flowing into stocks on the decline than stocks that are rising. So that is obviously bearish. Let's look at the VIX here. Let's look at the VIX. Up huge at 8.44% as I speak right now. That is a very nice pop in the VIX, confirming the downside and giving plenty of room for more downside today. We are above 24 again, which is pretty big. One note I want to, on Friday as well, we popped up about 8% on the VIX, which was very bearish. I want to note that the VIX has been very low for a very long time, relatively. Think back to this time last year, we saw 80 on the VIX. And now we're reading 20. So we're due for a pop, and right now we do have a higher high and a higher low. If we close above the 29 area on the VIX, that's going to be very, very bearish. At that point, the markets will be showing some real weakness. Let's go over to Strategy Desk real quick. The 1100 area on the SPY daily chart has held as resistance very strongly. That's 1100 on the S&P, 110 on the SPY. I want to note that we do have a lower high and a lower low on this this candle we are making today, and that is the start of a down leg. We'll see where that down leg goes. When it stops, we'll mark a swing low, and if it's below 102, look out below, because our next area of support is 100. Thanks for being a part of SwingHigh.com. Check back this afternoon for my post-market analysis.